Investors have grown increasingly anxious about the economic impact of the outbreak of coronavirus, with demand spiking for safe haven assets. In South Africa, it's not just the fear of coronavirus that is weighing on the markets. A sluggish outlook for the economy has added further strain. For Outlook for the week, I'm being joined by my colleague in Johannesburg, Audrey Chimwanda, to lead us into the week. Hello, Audrey. Good afternoon. Thank you for coming through to us.
A very good afternoon to you. Thank you.
Now, the coronavirus has become a global scare. How intense is it in South Africa over this virus?
Well, as you know, in South Africa, specifically here in Johannesburg, they have a very active Chinese community, and they're currently hosting what is known as the Chinese New Year. So we have a lot of Chinese nationals that are coming into the country, but the health department, especially the spokesperson of South Africa, has reassured citizens that they are fully prepared for this virus. They have equipment to check people's temperatures at the airport, as we know that the temperature is one of the symptoms that presents itself with the coronavirus. The South African Health Department on Sunday as well said they had stepped up efforts to detect the virus here in South Africa. They have gone further to brief the medical professionals on how to treat these patients should they suspect that somebody who's come into the country has this coronavirus. Also reminding the public that the coronavirus, there are no cases that have been reported in South Africa as we speak. And DIRCA, which is the Department of International Relations and Cooperation, also has issued a warning for South Africans that not also studying in China, as well as expatriates that are working in China, that should they have any plans to come back home, they should inform the SA Embassy if they suspect that they have contracted the illness, and also to tell them when they will be coming. So this is part of the steps, the rigorous checks on everyone that is coming onto the South African soil, Tunisia.
All right, now, this morning, the rand traded lower as well as the stocks. In fact, the JSE index was down 2.51% as at midday. So how should, as well as stocks, markets in South Africa should about now be closing? Where are the numbers at the moment?
Oh, absolutely. The rand has been struggling. It's still a bit sluggish. It's on its track. I think it's for the past 2 weeks as emerging markets continue to struggle once again with the coronavirus. We see emerging market currencies and stocks that really have fallen broadly, as the index for emerging markets have shed about 0.7%. We see the current indexes as well having fallen with about 0.3%. The South African currency, it has come under strain this month as demand was hurt by a weak growth outlook for the economy after the IMF and, of course, the South African Reserve Bank downgraded their growth predictions earlier this month. As of, like you said, this morning, the rand was trading at 14.55, down minus 1.02%. To the US dollar and to the pound. Also, it had gone down with minus 1.18%, and also with the euro trading at 16 rand 3 cents, which is a minus of 0.8% to the year.
Just as you said, the coronavirus is not the only thing impacting the markets. A weak growth outlook by the International Monetary Fund and, of course, South African Reserve Bank is also weighing on investor sentiment. The federal budget is being expected, that's February budget, actually, now to make a call, with Moody's set to make a call on the country's final investment grade rating in March. Looking at what are the discussions around all of this?
An incredibly important month for South Africans, February, that is, with a number of major economic events that are on the calendar that will have an impact on the day-to-day life of the citizens of the country. We're going to see petrol prices that will be adjusted in the first week of the month. The budget speech itself is scheduled for the 26th of February, and there's a possibility of tax changes and price adjustments that will be spoken about. Following this, also a credit rating review is expected from Moody's, and this could spark a further gloom outlook for the economy. Persistently, there's a weak business sentiment, a weak investor sentiment that has been coming out specifically because of the bouts of load shedding that have been constraining the South Africans' growth prospects the past few weeks and end of last year. We've also heard of the drought, which is likely to have a significant negative effect this year as well. All these economic events really are piling up on the pressure, specifically for the consumers that are already stressed and also carrying a lot of debt coming out of last year's festive season. Also, we know of the 25 basis point reduction on the repo rate by the South African Reserve Bank that was announced by the governor last week. South Africa's economy is still in a very shaky place at the moment. So Moody's is expected to deliver ratings review for the country, where it is highly likely that the country could be downgraded, as some of the insights that we're getting from analysts are coming through, sending a very negative message to the foreign investor community. That is the outlook that we have. So specifically, if Moody will act or not on the negative outlook and perhaps downgrade South Africa to what is known as a sub-investment grade come the 27th of March, remains to be seen, really.
All right, thank you. We'll leave it at that. Thank you for your time, Audrey Chimwanda. Well, talks to salvage a tentative $1.7 billion debt restructuring between Congo Republic and energy traders Glencore and Trafigura are stuck, jeopardizing an International Monetary Fund bailout for the debt-hobbled nation. The IMF signed off in July on a $449 million three-year lending program to help the Central African nation's ailing economy, but only $45 million has been disbursed, with other funds subject to semi-annual reviews. Those hinge on restructuring the oil-backed loans to the Swiss traders as money the state saves as reduced debt servicing would fill a gap in an overall $2 billion national rescue plan. More IMF disbursements could help unlock another nearly $900 million in financing from the World Bank, African Development Bank, and France, who are all backing the rescue program. And Tanzanian activists are asking the World Bank to delay a $500 million loan for education in the East African nation because of President John Magufuli's calls to restrict pregnant girls from attending school. While the funding is supposed to help improve girls' access to secondary education in the region's second largest economy, the government regularly prevents pregnant students and young mothers from attending classes. The Lenders Board is scheduled to discuss the project on Tuesday. Magufuli, who is expected to seek re-election in October, has been hailed for improving government efficiency and fighting graft during his first 5 years in office. He's also been criticized for what advocacy groups, including New York-based Human Rights Watch, say is suppression of basic freedoms and economic policies that have discouraged private investment. And finally, Zimbabwe's central bank has frozen an account of a Chinese company it accused of manipulating the local currency, which lost ground against the dollar on the black market last week. The Southern African nation reintroduced the Zimbabwean dollar last June, ending a decade of dollarization, but this resulted in runaway inflation, which economists say reached 520% in December. Reserve Bank of Zimbabwe Governor John Magufuli, in a statement late on Friday, singled out unlisted China Nanchang as a currency manipulator. Mongaya said the Reserve Bank Financial Intelligence Unit had identified Nanchang as a company that had used millions of Zimbabwe dollars to buy greenbacks on the black market, weakening the local unit. Nanchang is the major contractor for the construction of a dam that is set to supply water to Zimbabwe's drought-hit second biggest city, Bulawayo, among other government contracts. And that's it on the program. Thank you for watching. I'm Chimizi Obi Iwago.